Hello and a warm welcome to You and Your Money. I'm Bryan, and this evening we're focusing on the investment world. Joining me this evening will be Henry Biddlecombe, investment analyst from Anchor Capital. But I'm going to put up a slide now for you. Henry, good evening. Nice to have you on the show.
Hi, Bryan.
Yeah. Henry, this first slide that I'm putting up now talks about markets, and it talks about very simply when fundamentals are positive and sentiment is positive, markets will move up. When sentiment and fundamentals are negative, markets will move down. But when sentiment and fundamentals are out of sync, you've got all this volatility in the markets. So my question to you, you've been quite nervous over the last few months about equities, and equities have really done very little. But where are we in the global world of this fundamentals versus sentiment?
Yes, I think sentiment this year's been tremendously positive. Global markets are up. Certainly the US market is up a lot. South African equity markets a lot. But, if we look at the US markets quickly, I just think that there's very little room for error, which is really the important question to be answering. I always ask, where are investors being paid to take the risk? Where is the risk-reward equation in your favor? And I certainly don't think it's in your favor in the US. I think you've got a very high PE ratio on very bullish earnings growth estimates over the next 2 years. So I continue to be cautious, Bryan.
So Henry, the next question in the next slide. So we talk about a lot of euphoria about South Africa, the opportunities in the South African markets. And I'm putting up a slide here just to show, because I'm a little bit puzzled about that. And if my studio could just put up the slide, then I could take you through it. I mean, if you have a look at it, 71% of South African companies actually earn their funds offshore. And then if you add mining to it and other commodities, it takes it up to around about 81. The blue being all the companies earning their funds offshore, and then the orange bit is the mining companies. So when you talk about South Africa, I mean, we make up so little of world global GDP. Why is everyone so euphoric about the South African market all of a sudden?
Yes, when you look at the South African market, it's an interesting makeup. And it gets even more tricky because a lot of the companies that, in theory, earn their profits offshore are kind of exposed to both the rand and hard currency. So I would say the South African offshore mix is probably closer to 60-40. But look, that's why active management is such an interesting space in the South African market. This year, it's been all about the government of national unity, and incremental reform at a fiscal level, and how that feeds through into economic growth locally. And on top of that, we've had a pretty weak couple of years on the JSE. So you've had a revival in South African-facing businesses and their equities. And that's why many active managers this year have outperformed the index, because they've taken active positions in domestic counters. I think probably the easy money's been made for now, but given where we are in the cycle, given what's happening locally at a government level, given the strength of the rand, and given that I expect the rand to get even stronger from here, I'm very constructive on the South African equity market.
But Henry, is there a lot outside of South African companies that earn global monies? And obviously we talk about a weaker dollar. In other words, that in itself, any companies earning dollars is going to have an impact on our earnings, because the conversion from between the US and the UK, we've seen the UK rand, the pound recover. But are you saying now, is there a lot to choose from? I mean, you talk about property funds, you talk about banks, you talk about industrials, you talk about retailing. I mean, it's very much what you would call a top-down approach, rather looking from the top, which sectors you want to be in, and then looking bottom up, which stocks you're going to choose. Is there a lot to choose from?
100%. No, there's not a lot to choose from. The JSE is a very small market. And you're quite right, it's a macro view looking from the top down. And if the factors driving the local economy are in play, we'll look at banks, retailers, industrials, the property counters. All of it's looking reasonably attractive. If the backdrop becomes incrementally more positive, and I think it will. So what is our approach? We tend to stick to the more liquid counters just because they behave more predictably. Using technicals, for example, they're just a little bit easier to predict on that sort of level. So we favor the liquid stuff. Having said that, there's also a lot of opportunity in the liquid small cap stuff. They're really cheap. You've seen a flurry of delisting activity. And if you're willing to stomach the volatility there's some opportunity as well. So I don't think SA equities is a bad place to be over the next 12 months.
Yeah. And then, Henry, we talk about all the good things happening in South Africa. One of them that you overlooked is we've got lack of load shedding, which is excellent for our industries. And it's been now going on for quite a few months, and hopefully it will continue. Sure. But there are a lot of outside factors that can affect them. We're going to talk about one of them in a moment, about America. But let's just talk about China, because suddenly, over the last few weeks, the Chinese market has had an enormous run, and yet I'm not sure whether, is this in anticipation of what could be happening in China going forward?
Yeah, absolutely. But it's important to remember the extreme point that we'd reached just 2 weeks ago. If you go and look at a major equity index like the CSI 300, which is more representative of the Chinese market than a lot of the tech indices that we like to talk about. From the peak, I think in 21, 2 weeks ago, we were down 45%, right, from that level. So the market was really, sentiment there was really in the toilet. And right at that point, the government comes out and announces that historically the most significant stimulus program ever on a fiscal and a monetary level. I think someone mentioned it equates to around 3% of GDP, but it's a moving target all the time. They're set to announce more this week when they come back from their holidays. And the index is up, 25%. If you look at pre-market today, we're up almost 30% from the bottom. So I think it's just a strong bounce off of an extremely depressed level, catalyzed by very significant stimulus.
And Henry, do you think this is likely to continue? Because, China is still a big player in global GDP.
Yeah, it is. And more importantly, it's a significant contributor to global GDP growth, which is actually a more important metric than its absolute contribution in percentage terms. Look, I'm still long. I added meaningfully to client portfolios a week ago. But right now, if you look at where the index sits, we're only 25% odd from the peak, and it's a lot less obvious. So this week, I'm probably going to take some profits on that trade. The reason why they're injecting such significant stimulus is because they're in trouble. It's not because things are going well. And you don't wait. You don't want to. You can't price it in a scenario where everything's hunky-dory in 12 months' time. It might not be.
Henry, let's talk a little bit about the rand, because we've seen quite an amazing thing. We saw the rand, it looked like last Monday the rand would break through 17, and the next minute the rand was back at around about 17.50. So there's so much volatility, but you made the comments that you're quite convinced that the rand is going to improve. Your comments?
You and I have spoken about the rand for how long now? I think the past 2 years, and I've always told you I think it's too cheap. I still think it's too cheap, even at 17.50. When we run our purchasing power parity model, I can come up with a theoretical fair value of the rand of $15. So to the extent that rates keep going lower in the States, to the extent that our Reserve Bank keep lagging those interest rate cuts, and they might, the carry trade will reverse and the rand could get a lot stronger. I think base case, we're looking at 16.50 or lower in the next 12 months.
Yeah. Henry, why the big turnaround this week from just touching 17 back to 17.50? It seems like that any small bad news that comes in has a major impact on the rand.
Yeah, so what you need to watch are rates. If you have a look at the US 10-year over the last couple of days, it spiked from about 3.6 to 4% very quickly. And that's what has explained the very sudden bout of weakness in the rand from about 17.10 to 17.50. But if you zoom out, and you always need to zoom out, and you look at the longer term, US rates are likely going lower. The carry trade's going to unwind, and that's going to carry the dollar lower. So remember, this is more about relative dollar weakness than it is about rand strength.
Because if you look at the last week or so, the dollar strengthened a little against the pound. The dollar's been quite weak against the pound over the last few months, and it's strengthened. Yeah. So in terms of dollar strengthening against the pound, the rand weakening a little bit, the anticipation, are you seeing the dollar getting a lot lower?
Yeah.
So, Henry,
we still see
in terms of investors now sitting watching our program saying, you know, I've taken my money offshore, I've done well on the offshore markets, but now when I convert back to rands, and I always say to them, remember, you've still got assets in South Africa, and if you convert your South African assets to dollars now, and you add that to your offshore dollars or sterling, you'll find that you're no worse off globally in terms of your global assets. But would you be bringing money? Would you be bringing money back to invest in our South African markets?
I think it was a lot more obvious at 1850. That's what we were doing. At 1750, you could still bring some money back and buy South African equities, yes, especially if you're taking money out of the American equity market. So if you've made some money on the S&P 500 or in a fund that invests in the US, this is a great time to take profits. If you're underweight South Africa, and a global investor should be at about 10 to 15% in the South African market just to fund their lifestyle here, you can absolutely bring it back today and put it in the JSE.
Yeah. Henry, I had a look at a hedge, a global hedge, and I see that if you wanted to hedge the market against a downturn over the next 4 months, hedge will cost you about 1.5% on the US market, on the S&P. Would you be looking at something like that?
Yeah, I've been making active use of structures like that. We call it a put spread. And, volatility is relatively suppressed, so those sort of structures are cheap. If you've got the vehicle to do it, I think it's a very reasonable trade.
Okay, Henry, when we return, we're going to take a break, but when we do return, I want to get your insights into what we can expect from the US elections. I mean, I haven't seen any real comments about what the markets are feeling globally and what may happen if either Trump or Harris gets in. So let's deal with that when we return. Stay tuned, we'll be back shortly.